Welcome. 6/2/2010, stockmarketfunding.com and the SMF Pro Trading School and the MMT program are here. And the futures are gapping up this morning with that volatility that SMF has talked about time over time. Price action volatility is a way to make money. And that is going long and short within. So if Google has a $25 price range, is it just getting one price in one direction or both prices in each direction? So basically I'm going to show the S&P 500, okay? And like I said, it's 5:46 a.m. is your time stamp. The date stamp is 6/2/2010, weekly S&P 500. Once again, welcome to stockmarketfunding.com. So what we're going to show here is we were talking about this move right here and that there would be a big reversal coming. We have those videos on the SMF website. Go look for indexes and also join dailystockcharts.com for one reason. There you can get them all right away, and they're listed there as well. So it's easier to fetch them. Okay? But we called the top over here before this. We have those videos on our website. I think if they're dated something like either April 26th or 24th, and it's all the indexes there. Go back and fetch those videos and look at what we were telling the public. We were telling the public at that time to sell into the move. Okay? Did they listen? Maybe they did. Maybe they didn't. That's irrelevant. What is relevant right now is where this S&P 500 and where the market is. S&P was holding that 1040 level, and what we do want people to know is the Dow is much more important than the S&P, because they both, you can see these patterns here, and when you see the S&P here, it's same thing. Same thing. This is where, if you go look at our videos, where we call the top, okay? And on the S&P, we had this 1040 down here. Bam. This was that bottom. It's a weekly bottom. You tried to put a bottom in here, failed. Failed, and bingo. What we're going to do is take the SMF. We're going to draw a trend line right there at 1060. That 50-week moving average right here has a good chance of getting violated. Stop market orders could get taken out, because if you break 1040 on the S&P, you better be looking right above there somewhere. Let's just call it like this: 1013 to 1020 on the S&P 500. But let me also tell people, once again, go to stockmarketfunding.com and go back and take a look at the topping patterns that we had warned people about, and how this last part of the move right in here was getting to such exuberant levels that you needed this pullback there. This is that attempted bottom. Remember, bottom 1, 2 failed. Here we are, price action. Here's half of that wick. That 50-week moving average can get taken out. If it does, we're going lower. Without a closing price above that, it's very vulnerable that there's more downside action. And we want people to understand that. Now, on an intraday level, when you're trading your equity names, such as Google, Baidu, such as Priceline, such as Goldman, Amazon, the ones that have the higher beta price action, Apple, there are others. We trade lots of them here. The thing about it is, you're going to want to know what that intraday price action is going to be like. You want to be prepared for it. You want to be ready to execute it long, and you want to execute it short. The weakness, vulnerability is here right now. You have to have a closing price above that. I'm going to tell you what that is, what this is here on the S&P 500 index. Watch. And the Dow, the same charts, were 33. Over here, where that reversal started, we were at 72. That was that gap down. But prior to that, we were 93.68% overbought. And I said, hey, it's time to slide the bid on these markets and come down. And we did. That's the nice thing about it. The other thing is, with all the headlines in Greece and around the country, is people are very, acting out in their emotional way, like most people do. So the market has to overcome these objectives, and this is how they try to do it, with this long wick down at that bottom there that we were training people on. Not this last Friday, but the Friday before. And what the bottom effect would be relative to the earlier part of the year, right around that February 28th handle, and we had put bottoms in off of that January short. And here we are. But let me just caution everyone, because I can't keep the video too long. You'll have to stay tuned once again. But nonetheless, this line here is called a 10-week, and it's declining in price. I'm sorry. So is a 20-week. That means it's fallen over a little bit, and that even makes us more vulnerable. What we are going to do is draw a trend line for the SMF Pro Traders. And if I don't close above half of this bar on the S&P, meaning I got to have a closing price above half of this SMF weekly bar. That's this bar right here. Bam. I have to close above that to get bullish, and I have to stop declining in these weekly moving averages. Now, we do things different here. We are a very defined mathematical system that SMF has developed over its lifetime's worth of work that we give to certain kinds of people. And the thing about that is, you'll have to find that out in the 5 free day trial right here. It just went right by you there in the flash. So that's my resistance, and I have to close above it. If I go into it, then that means I'm going to be selling short a lot of equities names intraday. That means until the key indexes, and I'll do the other indexes later, but we're vulnerable right here at the 50-week simple moving average. Stay tuned.